Hi, and welcome to this week's Market Insights, where we cut through the noise to bring you the data and headlines that move the markets. Now, this week we'll track Canada's inflation report and the factors shaping the loonies outlook. We'll dive into the US durable goods orders for a read on business investment, unpack the Fed's preferred inflation gauge, and America's income and spending trends. So let's dive straight in. Now we're going to start in Canada, and Canada's inflation report arrives on the 24th of June at 3:30 p.m. GMT plus 3. Last week, Governor Macklem warned that US trade barriers are already weighing on Canadian exports and jobs and could drive prices higher if they stay in place. Now in April, headline inflation eased to 1.7% after the federal carbon tax was scrapped, but core inflation remained near 2.5% as good prices climbed and some extra costs began to pass through. Now the Canadian dollar strengthened as traders dial back the bets on the Bank of Canada rate cuts. If May's figures stay hot, the loonie could rise further as rate cuts could become more difficult to justify. Okay, next up, we've got the US durable goods orders. Now, these figures come out on the 26th of June at 3:30 p.m. GMT plus 3. US durable goods orders data is going to have an impact. In April, new orders plunged 6.3%. Now, that was the steepest drop since January 2024. That fall reversed a hefty 7.6% jump in March as new 10% reciprocal tariffs kicked in and demand faded after earlier stockpiling. A weak data weakened the US dollar for a while. Analysts expect a rebound in this report. Now, whether and how big a rebound happens will determine the dollar's move, so stay alert and don't forget your risk management techniques. Now we move on to the 27th of June, and the focus will shift to the Fed's preferred inflation gauge, the PCE price index, alongside US personal income and spending data, all due at 3:30 p.m. GMT plus 3. Now, last month, the PCE index rose just 0.1%, leaving annual inflation at 2.1%, while core prices also gained 0.1% on the month, but ran hotter at 2.5% year on year. Consumers tightened their belts, pushing spending up just 0.2% and sending the savings rate to 4.9%, its highest in nearly a year. Personal income jumped 0.8%, well ahead of forecasts. Now, markets wobbled on the mixed picture, but the dollar quickly recovered against both sterling and the euro. With lingering tariffs and geopolitical tensions at the forefront again, any surprise in the data could trigger fresh volatility. So once again, don't forget your risk management tools. Okay, and finally this week, it's corporate earnings statements, and these add another layer of insight to traders. Now, this week spans transport, consumer staples, discretionary, tech, services, and healthcare retail, offering a broad health check on the US economy. FedEx, Micron and Nike, for example, normally move the S&P 500 sectors they lead, so keep a keen eye open for those figures and be ready for some high volatility should the numbers surprise in any way, shape or form. Now that wraps up this week's Market Insights. With key data and earnings on the horizon, volatility is almost guaranteed, especially in Canadian dollar and US dollar pairs. Stay tuned to FX Open's news and analysis section for the latest information and news as it comes out. Thanks for watching, and we wish you luck with your trading in the week ahead. Bye for now.